Hey everyone, this is June from Turning Point Life Investment, and this video is for the week ending April 4th, 2009. So we ended another calendar month. As usual, what we're going to do is take a look at the SPY from a 10-year monthly point of view. The reason why I do this, if you're unfamiliar, is I want to look at the stock or look at the market from a longer trend. Okay, and take a look at the market from a big picture. Now we notice currently this past month of March, we ended with a nice decent white candlestick, and we produce, in terms of candlestick, this is a bullish reversal piercing pattern where the white candle closes at least within 50% of the previous large dark candlestick. Now add to that we have oversold stochastic, so this tells us that this is a relatively good decent bottom where the market can rally, at least correct this entire down move at this point. Looking at the moving averages, we can say that a good likely target for the market to rally to pull back towards is this 20-month moving average. Currently, it's around 110. So by the time prices move and by the time this 20-month moving average comes down, they should meet around the $100 mark right here. Okay, next we bring it in a little bit closer. We're looking at a 3-year weekly view. Okay, so this week we produced another nice large looking white candle. Let me zoom in a little bit for you guys. Okay, so you can see how we pulled back right into the 20-week moving average. So I mentioned last week that these moving averages will be great targets for pullback once the market starts trending, as it has been right now. So this is our first pullback target. If we get a break above it, then expect to find some kind of resistance with this 50-day or 50-week moving average. But of course, as I mentioned, it won't shoot up straight up. It'll probably pull back, consolidate, and then come back up in that fashion. Okay, next going into a 6-month daily view. All right, so last week I mentioned that prices, they were getting overbought, as you can see here with the stochastic. They were getting overbought. So as a way for the market to relieve itself of the overbought, prices can either go sideways or it can pull back down towards some kind of support. And it seems like prices are going sideways right now. And as a result, prices are coming out of overbought, as you can see here. Now, overall, even though we did make a relatively new high this week, I still feel like the market is still in somewhat of a consolidation within a range, as you can see here highlighted by my yellow. You can see that prices are still kind of range bound in some sense right now. If we get a nice decent break out of this range, I would say the first level of resistance is going to be around here. That's going to be somewhere around the 88 level as far as SPY. And of course, the ultimate level of resistance is going to be up here around the 95 level. So those are going to be our targets right now. If we get a continuation of this bullishness, look for 85 as your first resistance, and then possibly, if the market is really bullish, we can possibly hit 95. Okay, going into an hourly view, you can see how as far as support is, we can see that this 82 level, this is where the gap is. So look for this entire support. This entire gap can be a pretty good acting as support. If that breaks, then look for the next support around 78. And of course, the next level is going to be 76. But I feel like around here should be a pretty good, should provide some kind of bounce for the market if it decides to pull back a little bit further. Next, going into the VIX. Okay, so the VIX has been still pretty stubborn lately. You notice how it's still within this consolidation pattern, more or less looking like a triangle. Now on Friday, we closed pretty much right at support, right near the 40 level. If we can get a nice, decent, clear break underneath or out of this consolidation pattern, then that is a very good sign for at least for the bulls. And it's a safer sign to go long because that at least tells us that the sentiment has shifted from being neutral to more bullish. Okay, going back to the SPY daily, 6-month daily, I still feel as far as next week is concerned, there's still some more room for some sideways consolidation, a little bit more choppiness. Not until we get a nice clear break underneath the VIX, underneath the support level, can we be a little more bullish on the market. But despite what happened this week, I still feel that there's still a little bit of consolidation to occur, especially since we looked at the weekly view, how it's pulled back towards the 20-week moving average. There's definitely some more profit taking that needs to be done before the market can head a little bit higher from that point on.